Okay, it's live streaming. Okay. We can start now.
Sure. Let me share the screen. You guys able to see my slides for the FinTech talk?
Yeah, we can see it.
Okay. So, first of all, thank you very much for inviting me to share with you all the future of finance. Today we have about an hour to talk about what's the future of banking is going to look like, what is fintech, and how different technologies are going to come and combine and deliver a new banking experience for customers in the future. But let me start with introducing myself. My name is Top. I have been in the fintech and digital currency industry for 8 years now. 8 years now. I founded one of the very first Bitcoin startup in Thailand called coins.co.th 8 years ago. And now I founded my second company now called BitCup. We are the largest cryptocurrency and blockchain technology company in Thailand. We grew 600% this year. And last year we grew 400%. One of the fastest growing fintech startup in the country right now. We have about over 200 employees. Background, I studied economics at school. So, has any one of you heard of this person, Jamie Dimon? He's the chairman and CEO of one of the largest banks in the world called JP Morgan Chase. And this guy writes a letter to his shareholders every year, once per year. And in the 2014 letters to shareholders, this is what he wrote. This is one of the statements. He said, Silicon Valley is coming. Right? Silicon Valley is an area, a small area in the San Francisco in America. But this small area is where all the new economy, new companies are at. Companies like Facebook, Instagram, Google, Microsoft, Apple, Amazon, they're all in Silicon Valley, right? And this person says, this area is coming. Silicon Valley is coming to banking. Right now, there are hundreds of startups with a lot of brains, brain power, with a lot of money. They're coming in to change, to offer an alternative to traditional banking. And the role of bankers, he said, is to partner as much as they can. Right? They need to partner up with technology companies because he realized this almost 10 years ago that they cannot fight with technology companies. But first, let me give you a quick background of what fintech is. Fintech is short for short for finance. Financial tech is technology. Right? It is when we combine different kinds of technology together to deliver a better user experience in terms of banking. Right? To combine different technology together to create a new financial product or deliver better user experience, user banking experience. This is what we call fintech. But what most people got this wrong is that they thought fintech is a topic of its own, but actually it's not. Anything that we can bring in and the end result is an improved user experience in banking, we can call it fintech, anything, right? Even a credit card is fintech. Even an ATM machine is a fintech because it helps customers get access to a better financial services, right? Experience. So, what is fintech? Fintech is an amalgamation of different technologies. We can call it blockchain, whether it's blockchain, AI, big data, right? Peer-to-peer lending. Anything can be classified as fintech if the end result, customers are receiving, a better experience in terms of banking or financial products. Let me give you a few examples of why, say, big data is a fintech. There's this company in China called MyBank. MyBank is one of the largest digital bank in the world, but this MyBank was founded 6 years ago, only 6 years ago in 2014. Within the last 6 years, MyBank was able to sign up over 100 million customers in 6 years. But what is unique about this digital bank is that within those 100 million customers, they can give out loans to all of them within 3 seconds. 100 million customers in 3 seconds. And they only use they use a total of 0 employees to do that. And the default rate is only at 1.7%. Traditional bankers would be surprised to hear these numbers, right? Usually when you want to take out loans, traditional banks would take them maybe 3 months or to 6 months to release the loan to SMEs, to customers. And they usually employed a huge chunk of people to do the due diligence beforehand. Takes time, a lot of manual work, and the default rate is high. A lot of NPLs, right? Very high NPLs right now. But with this bank, they are able to release all the loans to 100 million customers within 3 seconds. The default rate is only down to 1.7%. And the reason is because they combine 3 different technologies together. Right? The first one is what we call the big data. They're combining traditional and non-traditional data together, right? To be able to assess the risk of each customer before they give out loans. Traditional banks, they only have traditional data sets. What are the traditional data sets? These are bank statements, right? Money in and outs, historical transaction history. Those are traditional statements, it's traditional data. But the banks, they are lacking what we call the non-traditional data. Those data sets that are online, right? On Facebook, on Google. In the last 10 years, we have been using the internet like crazy everywhere around the world. And it generates a huge chunk of data. What MyBank does is that they are able to combine those unused resources, right? Unused data, what we call the non-traditional data, together with the traditional data combines, and use them. And they use the second technology called AI, artificial intelligence, right, to analyze the risk, to assess the risk of each customers. Because when you have a lot of data, you cannot employ people to do this. It's not feasible. So you must use AI, artificial intelligence, to recognize pattern, right, to assess the risk, to clean up, right, the data. Then the last technology that they use is digital currency. How are you going to give out loans to 100 million customers in 3 seconds if you're still using paper money? It's not feasible, right? So they're using digital money to release the funds to customers' accounts within 3 seconds. And the default rate is only 1.7%. Big data is fintech, right? Because customers ended up receiving a much better service instead of waiting for 3 to 6 months. 6 months, they only need to wait for 3 seconds. So big data can be fintech. AI can be fintech, right? Digital currency can be fintech. If customers are receiving a better banking experience, anything can be classified as fintech. If we can, create a better financial product out of it. Let me give you a second example of why big data can be classified as fintech. There is this company in the US called Square. I don't know if you guys have heard of this company before, Square. They are based in the US. The founder is called Jack Dorsey. He is the founder of Twitter, right? And he also founded Square as his second company. But originally, Square got started when the iPad first arrived. What Jack Dorsey saw the issues or the pain points of users, of customers, is that most of the SMEs cannot afford this big machines, the credit card acceptance machines. I'm not sure what is it. I don't know what it's called. Maybe a POS machines, right? You have to buy the machines first from the bank, maybe around 50,000 baht, 60,000 baht per machines, in order for SMEs to accept credit cards. Things of bricks and mortar businesses, right? On the market, like open markets, they need to buy those machines. But Jack Dorsey saw that not all of the SMEs want to buy those machines. Those are sunk costs, and not all can afford those machines. But he also saw that everyone has iPads, everyone has iPhones. Why don't we tap on those existing devices and turn them into payment acceptance machines? So he started to send out the small white devices called Square that can be plugged in to the bottom of the iPhone or the iPad. Then customers would be able to swipe through that small white Square device to pay with credit cards. The original idea was to solve pain points for those SMEs who could not afford the POS machine, traditional POS machines from the bank. But what it turns out is that all the SMEs converted to using Square because it's more trendy to accept payments with iPad or iPhone. So his second company was a huge success. Then he took Square public on the stock exchange, NASDAQ of America, right? But what's interesting is that after Square went public, the stock price has gone up 1,000%, 10 times afterwards. After Jack Dorsey announced that Square will be providing a loan service to SMEs. What is interesting about Square is that in the last 10 years, they have been gathering a lot of non-traditional data sets from every credit card swipes through those machines, small white devices, Square machines. And those non-traditional data, right, are only available to one company, Square. It's only available to Jack Dorsey. And if you guys already know, SMEs cannot take out loans from traditional banks. They only give out to big companies with collaterals. SMEs do not have collaterals, right? They do not have a huge chunk of money deposits in a bank accounts. So they can't really take out loans. They need to, even though their businesses are very stable, but they can't take out loans. So they need to borrow from their parents, from their friends, to make sure that they are able to pay out the salary by the end of the month, just because the next paycheck hasn't arrived, hasn't hit the bank account yet, right? They have this cash flow, sometimes delay issues. And Square saw this and they said they're going to give out loans because for every credit card swiped, Jack Dorsey uses big data and AI, these two technology combined, right, to assess the risk of each SMEs using Square. And he's able to tell right away which SMEs are stable, which are not, which can afford to take out loans, which cannot afford to, which are too risky. Whereas banks, they just cannot provide any loans to SMEs, full stop, because they have zero data sets. And since they have no non-traditional data, they need to rely on collateral in case of default. But for Square, they don't need to collaterals. This is what we call a database lending, not a collateral-based lending. Rely on a set of data to assess the risk of each customers. And what is better about Square is that once Jack Dorsey has released the loan, and SMEs have this obligation to pay back the loans. Jack Dorsey said if a couple is running a hairdresser shop, right, store, then one day they got sick, they cannot work for the weekends. Usually SMEs got stressed because the interest rate is running. If they were to borrow money from traditional banks, they need to pay back every month, right? But Jack Dorsey said, you don't need to pay Square back every month. You need to pay every time that customers swipe the credit cards to pay for your services. You pay per swipe. And Square would lock up only a small portion to pay back the original loan. The rest, you can use the money to reinvest in the business. So it eases the stress of paying back the loans. And each credit card swipes, usually credit card companies charge around 3%. Square charges 2%. 2% is a much better service than 3%, right? So we call this a fintech because customers are receiving a better financial service. It's a better financial product. So fintech, so big data can be fintech. AI can be fintech. Blockchain can be fintech. This is a pretty powerful slide. I would like you guys to focus on this idea. It's a pretty powerful idea. If you look across different industries, there are two things that are the same: the demand side and the supply side. The demand equation and the supply equation. What never changed is the demand equation, right? There's always be a demand from customers to access different types of services or products. But what needs to be updated is the supply equation, the way we deliver those products, the way we create a new supply equation. For example, if you look at the IT, the communication industry first, the first column. I don't know if you guys were around, but when I was studying abroad, I had to quickly hang up the phone before it reaches a minute because it was super expensive. We used to pay 30 baht, 60 baht per minute for international phone calls. There was this demand to communicate, even in my generation. If you talk about the previous generation, my parents' generation, they were using letters, right? You write letters instead of emails. Or grandparents' generation, they were using telegram, very traditional ways of communication. But there's always be a demand for communication. What changes every generation to generation is the supply equation, the way we deliver a better services, right? In my generation, it cost me 30 baht, 60 baht per minute. When it reaches the new generation, you guys can talk on Skype, on Zoom, online, international phone calls, you get to see faces, and it doesn't cost a penny. Who's gonna win over the market, right? There's a demand for communication even in the new generation. But what changes is the supply side, not the demand side. If you look back, 100 years ago in 1920, the end of the First World War, the Spanish flu, back then, the world's population only got up to 2 billion people, right, on the planet. 100 years fast forward to 2020. Right now, we have 7.7 billion people on the planet. It means that consumption must increase by threefold, right? 3 times. But how come most companies cannot survive? Even though consumption increases by 3 times, threefolds in the last 100 years. There are more people, 3 times, right? More people, 3 times more consumption. But why most companies cannot survive? And the reason is because the demand side has never changed. What must change is the way we deliver products or services, the supply equation. If you look at the second industry, media or entertainment, in my generation, people used to rush back home to make sure that they can watch the TV drama on time. Because Channel 3, Channel 9 only forced people to watch the drama at a specific time, maybe 7:30 p.m. or 8 p.m. This was a pain point in the previous generation. And you can only watch 1 episode per week, right? Then you have to wait for the next week for the episode to arrive. That's not a very good user experience, right? In our generation, there's this thing called YouTube, Netflix, Line TV. People can watch whenever they're free. There's no need to rush, back home to watch specific, drama at specific time. And we can binge watching, 1 day for the whole series, finish within 1 day. Who's going to win over the market, right? Channel 3 or YouTube online or Netflix? The demand for entertainment has always been there, never changed. What needs to change is the way we deliver the products or services to customers. If you look at the retail space, $2 trillion industry, in the previous generation, people used to drive, to find a parking space at the department store to go shopping for groceries, bring them back home and cook, right? It took them a lot of effort. But in our generation, we just move a thumb, and we can eat pretty much anything within 30 minutes in Bangkok. Line, Grab, Gojek. Who's going to win over the market? Right? The demand, for retail has always been there. What needs to be updated is the supply equation, the way we deliver the service or the products. What is fintech? Fintech is this big question mark in the box, right? The demand for financial products, for financial services has never changed. There's always been a demand to borrow money, to deposit money, to lend out money, to transfer money, to receive money. There's always been a demand for that. But what needs to be updated is the way we deliver our financial services or the banking experience. This is what we call fintech. We need to change the supply side, the supply equation. But why is fintech revolution happening now? Why don't we talk about fintech 10 years ago? Why did we only talk about fintech, 20 years ago, 30 years ago? Why did we talk about fintech only 10 years ago in the last 10 years? And the reason is because 2008 was a big change in the banking industry. There is this big financial crisis in 2008, subprime mortgage, right? Recession. After that crisis, Lehman Brothers went down, right? People lost their jobs from that bank, and the regulators focus more on the bankers. They lift up the compliance expectation. Other CEOs of the other banking CEOs, they got panicked. They didn't want their banks to be shut down like Lehman Brothers. So they increased their focus. They put all their focus on compliance program. The last thing that they looked at was innovation in the last 10 years from the banks. They focus on compliance. After 2008, there's this big news of HSBC laundering money. The management got fired. Banks got a huge fine. Other bankers got panicked, double their effort on compliance program because regulators put the double eye on the banks. Innovation was the last thing that the banks cared about in the last 10 years. But if you look back, 10 years ago, there's this big jump of innovation. 10 years ago, we did not use Line for the whole country for communication, only in the last 10 years. 10 years ago, we did not use Grab. There were no Gojek, there were no iPad, no Instagram, no TikTok, no WeChat, Bitcoin blockchain. These things only happened in the last 10 years. It changes the customer's expectation. They are more demanding than ever. But if you look back to the banking industry, they only delivered the same quality of services. They only delivered the products or services using the 2008 technology. And this creates a huge gap between the new expectation of customers. They're more and more demanding than ever because other industries pretty much allow them to use a thumb to get access to different kinds of services, right, via a mobile phone. But whereas banks, they still force their customers, when you need to transfer money overseas, you need to drive to a branch, find a parking space, right? Put in the queue on the queuing machines, fill in the form, sign the paper 7 times on the paper, and tell the receiver that they will lose 5% of their money. Tell the receiver that you will have to wait for 2 days before the money hits the bank. This is the old expectation, whereas this new expectation is happening everywhere in every other industry. This creates a huge gap. And this gap is called the Fintech Gap, right? This gap is called the Fintech Gap. This gap is so big that now technology companies started to come into banking and close down the gap by delivering a better service or products, financial products with better technology. And that is the reason why we have heard the word fintech in the last 10 years, not 20 years, not 30 years ago. I have a few data set to share with you all, the market thesis that I just said. If you see, these are Fintech Unicorns. Unicorns is a company with a valuation of over $1 billion, right? $1 billion company. These are Fintech Unicorns. If you notice one thing, most Fintech Unicorns emerged after 2008. That's where banks stopped innovating and focused all their compliance, all their efforts on compliance program. 2008. So it opens up rooms for new players to deliver a better product or services to customers. If you see there are companies like the Lending Club, right, peer-to-peer lending, now they're in the stock exchange of America, right? They went public in only 10 years. And the Lending Club is now buying the banks, taking over the banks now. It's the trend is the reverse, because they are able to deliver a better service or product to customers. For example, if there's a rich customers and they want to deposit money for interest at a bank, and a bank usually give you maybe 0.5% interest. But those who want to take out loans, banks would charge you 7%, right, for the loan. And this 6.5% went to the bankers. It's not a really good service, right? What Lending Club does is that those rich clients that want to deposit money, they'll give you 3%. 3% is much better than 0.5%. And those that want to take out the loans, Lending Club would charge you 4%, much lower than 7%. Who's going to win over the market? Which gives a better service or product? Which is fintech, right? Lending Club is fintech. Or a second example is what we call a company called TransferWise. The average cost, actually the IMF and the World Bank just gave out the newest statistics. The average cost of transferring money overseas is at 5%, 5 to 7%. But if we are using TransferWise to remit money overseas, the average cost is down to 0.7%, 10 times cheaper, 1,000% cheaper. Who's going to win over the market? The demand side has never changed. The demand to transfer money overseas to family and friends, to look after the family overseas, right? The demand has always been there. But what changes is the supply side, the way we deliver the financial products or services. So TransferWise is fintech. People are able to get access to better products, better financial products or services. Right? This is the second data set. Global VC investment in fintech companies. If you look in 2009 to 2014, in those 5 years period, there's an 8 times increase in funding activity, 800%. We only had this data up to 2014, but I can tell you from 2014 to 2020, the curve is exponential, much, much more. Because VC saw this opportunity that banks put all their focus on compliance program. And this left a huge gap, huge room for technology companies to come in and innovate and deliver a service, an alternative service to customers. So they started to invest a lot in fintech startups. Since what year? Since 2008, right? That's the year, the crisis year, that banks stopped innovation, stopped their innovation. This is probably the most important slides of this talk. Social banking. This is the word that I would recommend you guys to take a note, because this is going to be the next big trend. Social banking would come in and change and disrupt the banking industry, the way that social media has already disrupted the newspaper industry. What is social banking? Are you guys familiar with this screen, this application? This application is what most younger generation use for communication, right? Facebook Messenger. Do you know that right now Facebook has more than 50 licenses in America alone to allow customers to send money on Facebook Messenger? This is the real picture, right? All right, I did not intervene, right? This is the real picture. If you look at the screen, right? Do you want to go to a concert? Yes, got the tickets, $20 each. How are you going to pay your friend? Here, you send a sticker. Right? When you send a sticker, $20 sticker, the money would hit right away. Right? I'm sure you guys have been sending stickers online, right? Line stickers. It would arrive right away, 0 seconds. It doesn't cost a penny for that transaction to happen. That's the future of banking. You can send values across in the same manner that you've been sending emails or stickers. Same manner, global, frictionless, instant. That's the future of payments. You can send $20 over on your Facebook Messenger, on your Line, on your Instagram. They already got over 50 licenses in America, Facebook. I think last 2 or 3 months ago, Facebook opened up a new service in Brazil. They allow people to send money on WhatsApp now. WhatsApp is the equivalent of Line, but widely used in Brazil. Thanks. This is what we call a social banking. Right now in Thailand, mobile banking is the winner, but I'm not social in the future. I think social banking, once they arrive, it will change the way we transact, even in Thailand when mobile banking is currently the winner. It's not too late yet for Thai banks to adapt and innovate. But you know which country is already too late? China. This green app, WeChat, is very similar to Line in Thailand. But, you know, it only took them 6 years. WeChat and Alipay to, to convert all of China to be cashless. Within 6 years, 1.4 billion people are not using paper money already in China within just 6 years. WeChat and Alipay has become the largest banks in just 6 years. WeChat and Alipay are one of the biggest social banking app in the world within just 6 years. They are able to turn 1.4 billion people, cashless, right? They're using, online payments via social banking. If you notice WeChat, in every Chinese New Year in China, it's already very different than the Chinese New Year in Thailand. In Thailand, we use paper money, right? We put paper money on the red envelope, and we would give out to our friends and family. That's how Chinese New Year works in Thailand, not in China. In China, they send out red envelopes. We call it e-ang pao, electronic ang pao, on WeChat. Over $100 billion just those few days during the Chinese New Year. Over $100 billion of payments within a few days. They already became the largest banks, like WeChat. Not just payments, you can also call a taxi. You can order a taxi. You can order food. You can book flights, railways, movie tickets, right? Book doctor appointments in just one app. We call it the super app trend. Who's going to win over the market? If you access mobile banking, you can only transfer money and it would take a long time. And the user experience is very painful, right? You want to leave the app ASAP. But for WeChat, for Facebook, for Line, you're addicted to the screen time. We want to continue using the app. With that one app, we can do everything. We can transfer money, we can chat with friends, we can watch movies, right? We can order taxi, we can order food. Who's going to win over the market? Social banking or mobile banking? Last month, Thailand just opened up our first social banking app called Line Kasikorn. Right. So in the next, 3 to 5 years, we're gonna, enter one of the most exciting era, of banking. Once the social banking arrives. So what is the future of banking is going to look like? How would this turn out in the future? There is going to be a new banking model of the future. right? There is a new partnership model going on in the future. There will be a partnership between tech companies and traditional banks going forward. But technology company would be the front end customer facing part, whereas traditional banks are the back end utility provider, part. The tech companies are going to act as a front end customer facing. They will do interesting, exciting things like money transfer, very profitable, right? Lending, very profitable, very exciting, the sexy part of banking. But they will push the boring part of banking to traditional banks. They will push the high capex, high cost, capital intensive part, low profit margin to banking. Things like keeping customers' deposits, very expensive, right? Very capital intensive. They push things like sending reports to the anti-money laundering officers to traditional banks to continue doing. They would push things like getting licenses from the Bank of Thailand, push those things to traditional banks, the boring part of banking. But the tech companies will do the interesting part, the most profitable part, like money transfer, like loans. There'll be this new partnership going on. And the reason why bankers or traditional banks will become the back end utility provider with less negotiation, and the technology company will become the front end customer facing with more negotiation power is that whoever controls more users win. And who controls more users? Traditional banks or technology company? Facebook or Kasikorn? Line or Siam Commercial Banks? WeChat or Krungsi Bank? Which company has more customers? Win, right? Usually tech companies have more users, so they have more bargaining power, and they're clever, right? They'll choose the most profitable parts of banking. They will choose the most sexy parts, and they'll push all the boring parts to traditional banks to maintain. Why would they have to turn out this way? Imagine if number 4 largest banks in Thailand wants to become a number 1 bank in terms of users, and this number 4 bank went after Line or went and partner up with Line or Facebook. They will instantly become the largest banks in terms of the number of users, because right now we have over 70 million Facebook accounts. We have over 47 million Line accounts, right? The number 1 banks, retail banks in Thailand, Kasikorn, only has 13 million customers, 13. Line has been around for only 10 years. They have 47 million customers. And if number 4 bank went out and partner up with Line, they will become the largest banks right away. If number 4 banks doesn't partner up, then number 5 banks, the 5th largest bank, would want to become the number 1 bank. So it forces the banks to partner up with technology company. Whoever is the first to do this would become one of the largest banks in Thailand. They haven't got the option to fight back, right? To create this front end customer facing app. There's this network effect. Here, I don't know if you guys have been following the stories, but the trend is so clear. Google wants to be your bank. It will soon offer checking accounts. People can create bank accounts with Google now. But Google is partnering with a bank on the back end to use the banks to keep all the customers' deposits, all the boring part, to force the banks to continue to send reports to the anti-money laundering officers, to force the banks to get the required licenses from the national bank. But Google will do the interesting parts like money transfer overseas, Google wallets, like payments, like loans, right? And if you have been following stories, Apple, the phone, right? iPhone company, iPad, Apple, they're offering a Apple credit card now, made out of titanium, very sophisticated, right? Looking trendy, classic. But they're still partnering with a traditional banks, the largest banks in the world, Goldman Sachs. But what is funny is that Apple logo is at the front of the card. Goldman Sachs logo is at the back of the card. Who is the front end customer facing? Who is the back end customer facing? Right? The trend is so clear. In 2016, there were only 1,072 fintech companies around the world. There are unbundling different financial services. We call it unbundling. They only focus on one part of banking, but do it much better than traditional banks. For example, Lending Club, peer-to-peer lending, disrupting the way the bankers are giving out loans, right? Circle, Stripe, PayPal, disrupting the payment space of banking. TransferWise, right? Disrupting the remittance market. Zoom, World Remits. In 2016, there were only 50 companies, less than 50 fintech companies in Thailand. In the world also, only 1,072 companies. It's not a lot. But 4 years fast forward, now there are over 170 fintech companies in Thailand. Right? The growth has been on a rocket ship everywhere. Now there are more fintech companies, way more than 1,000 companies in the last 4 years. Banks have been focusing on the compliance program. Innovation was the last thing that they looked at. So different companies are coming in now to unbundling different banking services for the people, for the customer to get access to a much better service in every part of banking, every parts of banking. Here in the ASEAN markets, in the ASEAN region, we are in the region of around 662 million people, right? But even though we're in the ASEAN region, Thailand is very different to Indonesia. Indonesia is very different to the Philippines, to Vietnam, to Malaysia. It's not one size fits all. What is unique about Thailand is that we're a small country of around 69 million population. But out of those 69 million, 70 million population, the mobile phone penetration is at 144%. What does that mean? It means that on average, we have for every one person in Thailand, we have an average of 1.4 phones each. We are already a mobile phone-driven country, mobile-driven nation. And out of those 70 million customers or population, the internet penetration is over 80% in Thailand. So most of us got access to the internet. And we are also a social media country. 70+% of the total population have Facebook accounts. We have Instagram accounts. We have Line accounts. We have Facebook, Messenger app. If you look at those statistics, the infrastructure is clear, right? Everyone has an average of 1.4 phones. We are a mobile-driven nation. Fintech doesn't need branches. Fintech only needs a mobile phone to get access, direct one-on-one relationship with the customers. So there's no extra investment there for the adoption to occur in Thailand. 1.4 phones each. The second thing that fintech needs is the internet. The internet penetration is already at over 80% in Thailand. The infrastructure is done for the adoption to occur. Also, social banking would likely to occur because We are already a social media country. Everyone has a Facebook account, Line account, Instagram account, WeChat account. It doesn't cost anything extra to onboard customers. So I would say, to wrap up, with these statistics in Thailand, we are ripe for disruption in banking. Internet is ready, mobile phone is ready, social media accounts are ready. And we're only a small country, 69 million customers. In China, they have over 1.4 billion people. And it took WeChat and Alipay only 6 years to turn the whole country cashless. So I think, in the next 3 to 5 years, this is going to be one of the most exciting, fintech era in the history, of the, of the banking industry. Thank you very much. That's all from me for today. Do we have any Q&A for this, or if
Yes, so now we're going to move on to the Q&A session. So for anyone, if anyone has any questions, just come off of mute and turn on your cameras and ask your question.
Hi, I have a question for you. So if you had to give like one advice to others who would like want to start up their own company, what advice would you give them?
Only one advice?
Like like how many ever you want.
Okay, maybe three advices.
Okay.
So for the first one, I think the most important advice is to make sure that you're starting something that's most people overlooked. You should start something that most people think it's not possible. You should start something that people ignore. Because an entrepreneur is not a job, but entrepreneur is someone who turns, something into reality, and the impossible possible. Why would I suggest this? And the reason is because humans, we are humans. We think the same thing. We think in the same manner. We act in the same manner. We have 2 arms, 2 legs. And imagine everyone is taking the same action. What is the different from the average? We're just going to be an average group of people taking the same action, ended up with the same results. But if you need to stand out, if you need to create impact, we need to be different. We need to think different. We have to be a small group of people that see this important truth, whereas everyone overlooks this important truth, where most of the people got this wrong. We must be the minority that is right when the majority is wrong about something. It would give you tremendous opportunity, not an average result. If you look back in history, most of the successful people, they were very right about something that most people were very wrong. If you look at Bill Gates and Steve Jobs, they were very right about computers. They already saw what is going to become the next big thing, how the world is going to look like in the future. Whereas most of the people are wrong about computer. They ignored, right? They underestimate, right? They laughed at the minority group of people. But they were right? The Steve Jobs, Bill Gates, they were a small group of people that were very right about computers, whereas most of us were wrong. It gives Bill Gates, Steve Jobs, tremendous opportunity as an entrepreneur. Or if you look at the second generation, say Mark Zuckerberg or Jeff Bezos. Jeff Bezos, if you have been following his story, he left his high-paid jobs, like really high paid job back in the Wall Street, to sell paper books online. Back then, it was a crazy, stupid idea. If you ask a lot of people, why are you leaving your Wall Street job to sell paper book online? But Jeff Bezos was very right about the internet, whereas most people ignored, most people laughed at, right? Most people underestimate the internet. This gave Jeff Bezos and Mark Zuckerberg tremendous opportunity to create the biggest impact of their career. They made the impossible possible. Or maybe 10 years ago, if you were to, if someone came up to you and said, we're going to be sharing our homes with strangers, most of us are going to say, crazy idea, who would share our home with strangers? But Airbnb was right. Airbnb was a small group of people that were very right about this thesis, whereas most of us are wrong. It gives Airbnb only 3 years to become a unicorn. Or maybe 10 years ago, if someone else came up to us and said, we're going to be sharing cars with strangers, most of us would say, stupid idea, crazy idea. But, Grab and Gojek and Uber, they were a small group of people that were very right about, about this thesis, important truth, whereas everyone was wrong. Everyone ignored, everyone laughed at them. So I would advise you to see, as an entrepreneur, to make the impossible possible. Don't do the same thing. Don't act in the same manner. Don't think in the same manner. Otherwise, that's the average. We cannot get away from being average. We need to be a small group of people that see some important truth that most people ignore or are very wrong about. It would give you tremendous opportunity. For example, myself, I'm only 30 years old. And if you compare myself to other 30 years old, cohorts, I'm not, smarter than anyone, right? Anyone here in this room, not any 30 years old, I'm just a normal person. But one thing that is different about myself is that I was very right about Bitcoin, whereas most people were very wrong about Bitcoin. It gave me tremendous opportunity in the last 10 years to create huge impact, right? I was on the small group of people on the side of history that, doing things that people thought it's not going to be possible, So I would advise you to, before you start a business, if you show your business ideas to everyone, friends, and they said, oh, this is a great idea, I would advise to not launch that business. Because everyone thinks in the same manner, acts in the same manner. Then if you continue to do that business, you're going to be an average Joe selling the same XYZ product, being average. So that's the important advice, number one. Number two is to make sure that you really stick to your vision. Everyone has different life experiences, and the way we connect our dots backwards is unique, it's different. So do not let outer voices alter your inner voice. Make sure once you've found your important truth, you stick to it. Sometimes it takes timing to make it work. Most entrepreneurs, gave up before that timing, before that, before they take off, about to take off. For example, there's this one entrepreneur creating this website called SimilarWeb. This website did not get any traction for 7 years. For any sane people, you would give up in the last, maybe in the first 3 or 4 years. But this entrepreneur persisted more than 7 years on his vision of SimilarWeb. And on the 8th year, that's where everything took off. So I would say, you have to have this strong conviction about something and do not let outer voice alter your conviction. And this conviction comes from connecting the dots backwards. Everyone has different life experiences. Make sure you connect the dots in a unique way, right? And the last advice I would give you is perseverance. If you need to be, an entrepreneur, actually a very good entrepreneur, you must have a very high pain threshold. You must be able to handle a lot of pain, right? The media only shows the good part about entrepreneurship, but this journey is tough. There are crises every time, every day. You must be able to persevere through. I think for all of the entrepreneurs, on all of the great entrepreneurs, there's this one common trait. And that one common trait is perseverance. What makes them successful is perseverance. So these are, three important advices I would give you if you want to be the future entrepreneurs.
Okay, thank you.
Excuse me, I have one question. If you want to be a future entrepreneur, what is your advice on like how you get yourself out there, like in the media and like exposure and everything? How do you get really popular among the others, Yeah.
I would advise, I would separate into two groups. The lucky, I would say, I would call it the lucky sperm club and the less fortunate club. If you fall into the first category, the lucky sperm club, the silver spoon, your parents do not need money from you. I would encourage you to start a company right away. Do not go and work for anyone. I can guarantee within the first year of you starting a company, you will learn much more than working for someone else for 5 years. You need to do everything to make sure that your company survives. You have to wear different hats. You have to go out of your comfort zone, right? And the reason why I suggest you start the company right away is because you're young. You can work 24/7, right? You don't have a family, kids to look after yet. Your parents are still there to give you moral support, and they don't need money from you. Everyone is jealous of you, so make sure you don't waste this opportunity. Go and start a company. You will learn so much more. But if you leave it too long, you go and work for someone else until you reach 40, 50 years old, say 40 years old. By that time, your parents are probably no longer there. You probably have a family of your own. You probably have kids, obligations. You cannot work 24/7 because you're older, right? You have a much higher opportunity cost now to start a company, not vice versa. So if you start a company now and it fails, you will learn more than 5 years of working for someone else. And you can always go and apply for a job, right? Still young. Everyone would accept you as an employee. So it's not vice versa. Once you reach 40 years old, you cannot quit. The risk of quitting is much higher than now. So if you fall into the first category, go and start a company. Right? Everyone is jealous. Don't waste that opportunity. But if we're in the second category, the less fortunate ones, what are this group? The parents need money from you. You need to look after the family, the parents. Then I would suggest go and work with a new economy. Go join new companies. Don't go join the old economy. A lot of people have the same skill sets. Old industries have been around for 50 years, 100 years. There are a lot of employees who shares the same skill set. Don't join them. Leave those jobs to them. We should be responsible to push the world forward with new skills, with new technology. There's this 5G technology arriving, right? There's arrival of big data, AI, blockchain, cryptocurrency, peer-to-peer lending, new technologies. So you must employ new skills to push the frontier, to push the world's frontier, to push the world forward. So join the new economy. Do not join the old economy if you're the less fortunate ones. Do not join the old economy where the skill sets won't be employable in the next 3 to 5 years. Go join the new economy where your skill sets would be valuable, in the future. But the best case is to start a company. To start now. I cannot teach you about entrepreneurship. It's like, I don't know, if you want to ride a bike, I can sit there for hours, talking to you about how to ride a bike. But you're not going to be able to ride a bike if you don't start riding a bike and stop being scared of falling off the bike. Every biker, even how talented you are, they must fall off the bike before. They must fail before. I failed a lot before I got here. So start right away. That's probably the advice I would give if you want to be an entrepreneur. Do not be scared of failure. You will learn so much more. Optimize for skill sets. Don't optimize for money, right? When we're young, optimize for skill sets and opportunity. Create opportunities for yourself, and also create opportunities for others.
All right. Thank you so much for your answer.
Thank you.
We received a few questions in the chat, so I'll read the first one. Hello, I have a question. According to the trends of fintech from the past leading up to now, how much do you think it will have changed in the future? Do you think we will become more dependent towards it, or will businesses want to go back to the traditional way of paying?
No way. Once there's no way, we are going back. I believe that the world is moving forward, not backwards. Right? Imagine if you know how to drive a car. Would you go back and ride horses? You never go back and ride horses. If you know how to send emails to your friends, you will never go back and write letters to friends. If you know how to use Skype, how to use Zoom for international phone calls, you will not go back and pay for 30 baht, 60 baht per minute for international phone calls. Same with fintech. Banking is ripe for disruption. The future of payments will be digital, right? There will be an arrival of fintech, technologies like blockchain, digital currency, social banking that are coming into unbundling different parts of banking. There's no way back. The world is moving forward regardless. Even let's take it to the extreme. Even if you are the most powerful person on the planet, you cannot stop market changes. The world moves forward every day we get up out of bed. All right, Kodak was the huge, powerful incumbent in the photo camera industry. Where are they now? They cannot resist digital camera. Anything that is cheaper, faster, better wins in the long run, right? Kodak is no longer here. Right? Blockbuster is no longer here. They were the huge incumbents in the video space. Netflix is now the biggest player because they are able to deliver their services in a much faster, better, cheaper way. Same with banking, regardless of how big they are. The world moves forward. People want better things, faster things, cheaper things, regardless. You cannot resist the change. So to answer this question, there's no going back. Right? We can only move forward.
Okay, and a second one is there have been instances where the information you learn in college becomes obsolete, like getting a degree in computer science and then the first IBM PC comes out or the Macintosh. How should we react to this if this happens in the business industry?
I think that's the normal. It's normal. It's in business or in life. Let's talk about universities first. Take whatever courses you like, you enjoy. Because by the time you graduate, you're not going to be using any of the skill sets because the world is moving at a much faster rate. Right? I studied economics. I went and worked for the Bank of Thailand for a bit. what we were taught at school were way too advanced and not realistic, right? Just theories, a lot of theories. I do not use any of my economics skill sets or degrees from what I am currently doing. What taught blockchain? Which university taught blockchain in the last 10 years? None, right? And imagine the next 10 years, the world is not going to be moving at the same pace. The world will be moving at a much faster pace in an exponential rate. So whatever, theories that you learn at school, not going to be valid. It's not going to be the same set of assumptions. We're going to be in a different world soon. So take whatever you enjoy. And you have to have this mindset that the most important thing about university is to teach you about, about learning how to learn. Because if you stop your learning within the first 3 years of universities, then you are already old. You are only learning 1/10 of your career, 30 years, right? We have a 30 years career, 40 years a career. If you stop your learning within the first 3 years of university, you only learn 1/10 of your career. And the world is moving in a faster pace. The assumptions are different, every year going forward. So you must be able to learn how to learn. That's the most important skill, even in business or in university. And the second, lesson from university is to make sure that you can handle handle a lot of pain. Because in business or in real life, you must have this perseverance to stand out, which most people are lacking. They need instant gratification, right? They cannot handle pain. But that's not the trait of entrepreneurs. So make sure you learn these two things at school. And take courses that improve your logic. Do not take courses that force you to remember things, because computers are better at remembering things than humans. So don't take, memory courses. Take courses that improve logic, like computer science, like philosophy, or the other side, things that would boost your creativity, skills that computers are not able to do. You can apply those logic or creativity in the future.
Okay, I think this should be the last one. How has COVID-19 affected people's attitudes towards financial technology? Has its reputation increased since then, and is it finding a bigger place in today's market because of COVID?
Very, very good questions. The world is changing regardless of COVID. But COVID is only acting as a catalyst to speed up the changes. For example, if you look at my company, we are growing at 600% this year. Last year, we grew 400%. COVID only expedites the changes, right? Even without COVID, we grew 400% last year. With COVID, we grew an additional 200%, 600%. With COVID, people are, it's a forced, we call it a forced disruption. It forces people to go online. It forces people out of their comfort zone to get access to services. Remember, the demand side never changes. What changes is the supply side, the way we deliver services and products. And COVID is the health issues, global health issues that forces people to go online for their safety, to get access to, a safe product, services. Same with money. People do not want to touch paper. It could contaminate, right, the disease. So people do not want to touch things. We're moving towards a touchless economy. And fintech is all about that, right? Moving things to digital for faster payments, quicker payments, cheaper payments, better services. So for sure, right, COVID is acting as a catalyst to force people to go online. People, companies with digital strategies benefited from COVID, whereas companies without digital strategies got affected hugely by COVID. It's just, speeding things up. Regardless, imagine if COVID didn't happen. This will happen anyways, maybe in the next few years, not now. But the change is ought to happen. No one can resist the change. So the future of banking is digital, right? The biggest nation on earth is going to be the internet nation, not going to be China, the internet nation, the digital economy. Everything will be moving to digital. That's the future.
Okay, so does anyone have any questions? If not, then we're going to start closing up. Okay, so thank you, Kuntop, for your time. We got to learn a lot about fintech and the misconceptions and understanding the ecosystem of financial technology. Thank you, everyone who is watching the live. And if you're interested in learning more, you can find us on Facebook, Instagram, and YouTube. All of our social medias are called Best Entrepreneur Students Tryouts. And we have usually one speaker every month. And also please go follow Kuntop too on his social medias. Yeah, thank you again, everyone.
Thank you, Kab.
All right, thank you.
Bye. Thank you.
Bye.
Yeah, thanks a lot. Bye.
Cartoon, you can stop the live on Facebook.